13th five-year plan from 2016 to 2020 is topping the agenda. What are the main outcomes that the IMF is expecting?
What is critically important now is reform progress on the state-owned enterprise side and also allowing the market to play a more decisive role. Now, what that implies is that one also has to be willing to allow non-performing enterprises to exit.
The IMF projects China's real GDP growth to slow down to 6.8% this year and then further to 6.3% in 2016 because of the shift from an export-oriented economy to one driven by consumption. Are you still keeping this forecast?
I think what we're seeing is that the Chinese economy is on track to move toward a moderately slower growth rate. That is at the same time associated with a stronger service sector and more consumption that will help with the rebalancing that we all want. In our view, that is a trend that will continue and will allow China to move toward a more sustainable and quality-driven growth model. Now, when it comes to our own projections, we may revise our projections slightly upward, but we're currently still analyzing some of the data and want to wait until additional data points have come in.
Does that mean that maybe China will even reach its annual growth target of around 7% for this year, do you think?
In our view, even our 6.8 would be consistent with an about 7% target. So yes, we assume that China is on track to meet its about 7% growth target.
China may cut the real GDP growth target for the next five-year plan to around 6.5% from the current 7% annual growth target. Do you think that 6.5% over the next 5 years would be realistic?
The most critical thing for China, in our view, is that it continues with the restructuring of the economy toward a more sustainable growth model. Now, that will imply in the short term that growth will slow down. In our view, growth between 6 and 6.5% will be most appropriate. Now, what is very important is that what China is trying to do, you won't find in economic textbooks because it requires this calibration of macroeconomic and structural policy to ensure that the economy adjusts while also avoiding that there is too sharp of a slowdown.